Hello, I'm Natalie MacDonald for the Finance News Network. Joining me now from Adslot to discuss the company's first half 2016 results is CEO Ian Lowe. Ian, welcome back to FNN.
Thanks for having me.
Ian, before we get into your results, can you please firstly give us a brief overview of the business?
Yes, certainly. So Adslot is a software company. We build and sell software to the media industry. And the way to think about what our software is doing is it automates otherwise very manual interaction between buyers and sellers of media. So we have workflow automation technology that we sell to media buyers, and we have trading automation technology that we sell to both buyers and sellers of media. And the business at this stage of its journey is very focused on online advertising, and in particular what's described as display advertising, which encompasses formats like video advertising and banner advertising and mobile advertising on mobile formats as well.
Thanks, Ian. Now let's take a look at your results for the half year ended 31st of December 2015. What were some of the highlights?
Well, overwhelmingly the highlight was the growth in our trading technology revenue stream. So we report this as a discrete segment. Trading technology grew 39% half on half and 65% year on year for us. We'd really been projecting, I think, for a little while to the market that sort of quantum was our expectation. So that was a really pleasing result, and overwhelmingly that's the focus of the business. So I think it's important that we can point to that sort of growth with our trading technology revenues specifically. The second highlight was that we also saw strong growth in the volume or value of demand that we capture through our Symphony workflow platform. So this is demand that is executed or media buying that's executed by the agencies that use our Symphony platform, and that reached on an annualised basis nearly $3 billion by December 31. So the pool of demand that we are capturing through our technology, and therefore our opportunity to grow market share, continues to build. So that, again, that's a continuation of an established trend. And then the third highlight really is that in all of that revenue growth, the cost to provide the technology that actually underpins that growth was flat. So this again points to the economic fundamentals of the Adslot business, where our technology is hosted in the cloud. The variable cost of sale, if you like, to provide and service the use of that technology is a very modest percentage of revenue and largely a fixed number. So this points to obviously a bright future as the revenue for the group continues to build.
Ian, as you mentioned, the trading technology revenue line was an important performer for the company in the first half. What was behind the strong growth in this area of the business?
So trading technology comprises two different revenue streams for Adslot. The first is license fees, where we charge a somewhat fixed license fee to an organisation that are using our platforms. And the second is trading fees, where we charge a percentage of the dollars that are traded through the technology. So look, the really positive thing is that both the license fee revenues and the trading fee revenues grew significantly half on half, year on year. So both of those revenue streams that roll up to create the trading technology segment are growing. Within that, if we look at the license fees, that growth was really driven by new deployments, new contracts, new customers. So new business, which demonstrates that the technology is seen as valuable, we are acquiring market share. In the case of trading fees, the growth really was underpinned by existing agency relationships, where we're driving a greater level of awareness and ultimately adoption of our trading automation technology. And so this is the technology where we derive a clip of the ticket, if you like, or a percentage of the spend that's executed through our platform. So the somewhat more predictable license fee revenues are growing, and the somewhat more variable trading fee revenues are growing. And so that's really healthy for our future to see both of those sub-segments within trading technology delivering against the overall growth of the business.
Last question then, Ian. What is Adslot hoping to achieve in the second half of the financial year?
Our expectation is for continued growth in trading technology revenues, and we expect to see that growth come from corresponding growth in both license fee revenues and trading fee revenues in both of those areas. The second is that the demand that we capture through our Symphony platform, that will continue to build. That number will grow beyond 3 billion. And then I guess the third thing is that the cost base associated with the provision and the maintenance of that technology, the variable cost of sale, if you like, that will remain flat. So the outlook for the business, I think, is really positive on all three counts.
Ian Lowe, many thanks for the update.
Thank you.